Hello and welcome to Crypto Bible. My name's Oliver, and in today's episode we're going to be going over a couple of news articles that I think you're going to find interesting if you love crypto. Now, before we get into it, go ahead, throw me an early like. We kind of love that. And subscribe to Crypto Bible, press the notification bell icon on so you never miss any of the upcoming breaking news stories in cryptocurrency. Right, before we get stuck in, let's have a little look at what the market is doing today. Okay, here we are. We're on CoinMarketCap. Top trending coins are Nevada, Gaming Shiba, and Shiba Doge. Biggest gainers, Wall Street Capital, Glow V2, Snow Tomb, Lot are the biggest gainers. We come down a bit. We've got a bit of a green kind of vibe today. Bitcoin 4.2% up, trading at 38,539. Ethereum almost 10% up, 9.84%, trading at 2,774. BNB 3.72% up, trading at $382.92. Cardano up, Solana up 17%, XRP, Terra. So far we're looking like we've got a little bit of a rally. Right, let's jump into the first news article. Okay, this one's from Cointelegraph. Is the bottom in? Institutional crypto funds record a second week of inflows. Despite extreme fear in the market, institutional investors appear to be reaccumulating Bitcoin using dedicated funds. After recording heavy outflows at the start of 2022, crypto investment funds have seen a gradual uptick in investor demand over the past 2 weeks, offering cautious optimism that the worst of the market downturn had passed. Digital asset investment products saw $19 million worth of cumulative inflows last week. According to CoinShares, Bitcoin and multi-asset funds led the gains with $22 million and $32 million worth of inflows, respectively. The news wasn't all positive. ETH continued to suffer from negative sentiment with outflows totaling $27 million. That marked 8 consecutive weekly outflows for ETH-focused funds. Sol, Polkadot, and Cardano products are also registered outflows for the week. Digital assets have been heavy outflows since December, and institutional investors took profits and reduced their positions, an extreme sell-off in the market. So far this year, Bitcoin funds have seen a net $131.8 million worth of outflows, according to CoinShares data. Ether funds have seen $111.2 million worth of drawdowns. Bitcoin's price rose as high to 38,778 on Monday, according to Cointelegraph. However, flagship crypto is down 20% in January, marking its first worst start to the year since 2018. Now we have the fear and greed index, a little visual here. So currently it's extreme fear, and on the January, yesterday, 31st, 2022. So the crypto greed and fear index monitors market sentiment using several sources, remains in a state of extreme fear with reading of 20. The index, which sides along a scale of 1 to 100, plunged as low as 13 last week. Nevertheless, net inflows into Bitcoin and multi-coin funds suggest that institutional money is slowly returning to the market. While traders remain at odds whether the market is actually bottomed, long-term investors posit that a sub 40,000 Bitcoin is an attractive buy opportunity. So this is typical, isn't it? So retail buyers aren't buying, it's low, big investors get in there and are going to start filling their boots. What do you think about this? Do you think retail investors are going to see institutions get involved? Are they going to start getting involved? We're going to start seeing an uptrend in Bitcoin and the rest of the crypto market? You're going to have to let me know in the comments below what you think is going to happen. We've just seen on CoinMarketCap, a few coins are in the green today. ETH is almost 10% up. Is that going to continue, or are we going to see a downward trend, bearish? Let me know what you think in the comments below, and we'll go on to the second article. Okay, so this one's from Decrypt, and it's flexible workers are driving a shift towards crypto payroll providers. So Request Finance is meeting the needs of flexible, decentralized, and nomadic workers with its seamless platform for crypto payroll. This is interesting. So COVID-19 has sparked a revolution in the workplace. Many businesses are permanently shifting to remote working and seizing opportunities presented by a decentralized working model. For companies, that means smaller cost footprint and a more global pool of talent to draw upon. For workers, The pandemic has accelerated existing trends, such as the move towards digital nomadism, the rise of side hustles, and the rapid growth of the virtual economy. With the ease of restrictions has come an explosion in pent-up pressure as workers abandon employees who refuse to adapt to this new way of working. In what's been termed the Great Resignation, a quarter of the global workforce considered changing employers in 2021. That's a lot, with the resulting exodus of undervalued staff being dubbed the Great Resignation. These dissatisfied workers are demanding flexibility. More than half, 54% of employees globally would consider leaving their job post-COVID if they are not afforded some sort of flexibility in when and where they work, according to EY 2021 Work Reimagined Employee Survey. We're seeing a broader global shift in how people think of work. Ivan Hong, content leader at crypto payroll platform Request Finance, told Decrypt, a lot of people that are working remotely are also working multiple jobs because they now have the freedom to do so. Okay, I see this. An October 2021 survey by resumebuilder.com found that as many as 2/3 of remote workers in America hold multiple jobs. This increasing flexible global workforce still needs to be paid, meaning employers will require reliable cross-border and mutually accountable payment systems. And with the emergence of virtual economy, a growing number of workers expect those payment systems to integrate with the booming cryptosphere. So a decentralized workforce naturally requires more agile, borderless payment methods, says Estella Shardlow. Now, she's senior editor, consumer attitudes, technology and trends, intelligence firm Stylus, and she told that to Decrypt. This isn't only about bypassing the costly, slow tradition intermediaries, but also dealing with different taxing structures, insurance benefits across jurisdictions. So, crypto by request. Enter Request Finance. The startup itself, a remote-first company with team members based in Singapore and France, is becoming a one-stop shop for companies using crypto to manage their financial operations and accounting across different types of businesses, transaction ranging from invoicing to payroll. One of the major problems companies have when dealing with crypto assets is difficulty of counting for the transactions made. Strings of hexadecimal wallet addresses with no easy identifiable counterparts, the lack of accompanying paperwork on top of constantly fluctuating prices and gas fees make accounting in crypto administrative nightmare. So there we go. It's a little visual for you there. I won't read it to you. You can look at it. Check it out on Twitter. So that's where Request Finance platform comes in, allowing crypto companies like the Sandbox to easily create, send and pay invoices or payslips in crypto. Built on the protocol's blockchain, users have full control of the data, while the technology allows for radical transparency in payroll, recording all ingoing, outgoing, and outstanding transactions on an immutable ledger. On top of this, Request can also automatically sync crypto transactions on its platform with existing enterprise accounting tools like Xero and QuickBooks. Request also enables companies to use cryptocurrencies to avoid the inefficiencies and expense of making payments in fiat currency across global borders, a move that will appeal to a new wave of distributed workers. So users select typically fiat currency to invoice in while payments are settled in crypto of their choice. This service is affordable too. Clients pay a 0.1% transaction fee capped at 2% total, according to the company's monthly report for December 2021. Stablecoins like USDC and DAI were the most commonly used currencies, accounting for 24.2% and 18.6% respectively for the nearly $170 million in invoices paid in that year alone. Its first product, Request Invoicing, is soon to be joined by an array of new features, including expenses, payroll, and accounting tools, all which are currently in beta testing and likely to be progressively made available for users over the next year. Creating an adaptive payments platform. As of November 2021, Request has over 1,000 companies and decentralized autonomous organizations using its payment functions. So reaching 1,000 is a proof that we're building something people want. We're proud to be working with major players in the Web3 and Metaverse industry, they say. And we aim at reaching 50K Web3 builders and creators within 2 years, says Christoph Landshut, co-founder of Request. So their appeal lies not only in its utility, but also its adaptability across a wide range of companies looking into managed payments and accounting in crypto, from hackathons to managing payroll, for remote teams to NFT marketplaces. All of our users find that their own use case for the platform, Hong explained. MarketDAO is such one member that uses Request Finance to keep track of payment progress, as recorded on the protocol's blockchain. Request gave us more transparency into payment statuses across the organization, says Amy Young of MarketDAO. On top of that, email updates ensure invoices are automatically followed up, a time saver for us. So using Request is easier and less error-prone way to manage crypto payments in different tokens, added Frederick Meyer-Schramberg of the Swiss Blockchain Hackathon, which used Request to distribute crypto prizes for the 2021 edition of the event. So they supported payment options, continue to expand. Users can process transactions in 40 plus stablecoins and cryptocurrencies and 10 plus blockchains and fiat currencies. Its promise of financial flexibility is sure to attract even more members. Demand for crypto payments is being driven by the rapidly growing small and medium business sector, shorturl told Decrypt. For these companies, this merchant fees, exchange charges, delays of Swift et al., not to mention the risk of credit card fraud, can be crippling. Crypto and blockchain present a suitably fluid, secure cross-border solution. And it tackles stumbling points typical of the traditional global payment system. In particular, small businesses and freelancers often face the challenging of chasing down payment for the invoices. The pandemic has only increased the incidence of overdue invoices. In America, by 71% of invoices are overdue. That's a big number. So by contrast, after a year of operation, reports from Request say that 31% of invoices had not been paid by their due date. So thanks to this product, Request users can monitor the status of their invoices and on the Request platform, which automatically sends payment reminders and flags late or missing payments, which also counts towards a payer reputation score. That's interesting. Automatic verification of invoice payment statuses via the blockchain also removes the need for awkward yellow follow-up emails. So they can see the status of the invoice was sent, whether it's paid, whether it's approved, whether it's ignored, and both parties can see that record. Providing payment accountability will be vital to winning over members of the global virtual economy. And a little bit of what we spoke about there from Ivan Hong, what he said. Since its launch, Request has processed over $170 million of crypto invoices and is on course to be a key player in the growing crypto payment space. In the words of Hong, crypto is no longer just a speculative asset class, but a global payments tool that is enabling new ways of working and doing business. So, are you a freelancer? Can you see this working? Can you see yourself saying to a client, listen, I want you to pay me in crypto. I use this platform, Request Finance. It does everything for me. I want to get paid in ETH. Can you see yourself doing that? Especially if you want to get out of fees. Say you've got a client that's abroad, you want to get out of the fiat exchange. What do you think of Request Finance? I remember when it first came out and there was a massive boom. Then obviously we had the downward trend. I'm not sure what it's going up for at the moment on the market. But are you bullish on Request Finance? Do you have the coin, the Request token? Let me know. And do you think, I guess it's another option for freelancers and employees to use that love crypto. They just need to make sure that the workforce or the clients are, crypto minded as well. I would love to know your thoughts about this article in the comments below. So that's it for today's episode. I would love to know your thoughts on today's articles. Is it the bottom of crypto? Are we starting to see a little bit of a rally, an upward trend? People getting more bullish. We're seeing that institutions are getting in now. Are residential buyers going to also follow suit? Remember, do your due diligence and research. And also the Request token. We spoke a little bit more about it there. Is it a good idea? What do you think? Are you a freelancer? Could you see yourself using the Request Finance platform? Let me know in the comments below. As always, throw me a like. That always goes down well. Get yourself subscribed to Crypto Bible. Turn your notification bell icon on. Ting! And you'll be notified of all of our upcoming breaking news stories immediately. Once again, thank you for joining me for today's episode, and I'll see you on the next one.